Ladies and gentlemen, welcome to the third episode of the Market Outlook, an Altec Group's podcast. My name is Geraldo Ferreira. I am Altec CEO for Americas, and I will be your host today. On this episode, we'll discuss about the world steel economic projection for 2022, the commodities trends, an update on the graphite electrode market, and the world steel production. The World Steel Economics has released recently their revised projection for steel demand and highlighted that the persisting inflation is a result of the higher energy and food prices, the United States monetary tightening, the China's economic deceleration, and the consequences of the Russia and Ukraine conflict. So the falling confidence have led to a slowing in steel sector activities driven downward revision. So the World Steel predicts that steel demand will contract by 2.3% in 2022 and after an increase of 2.8% in 2021. So according to this projection, the major economies like United States, is still sustaining a strong recovery from the pandemic, but is coming to an end as the Fed is pursuing aggressive interest hikes to contain inflation. The steel user sectors like automotive sector is expecting to maintain the positive momentum on the back of repressed demand and ease of supply chain constraint. The construction sector will struggle due to the easing of the housing boom and the delayed recovery of the non-residential sector on the back of rising material costs and high interest rates. So the good news is that the new infrastructure law will, however, sharply boost infrastructure investment, and rising energy sector investment will support the growth in steel demand despite of weakening economy. The steel demand in the United States is expected to grow by 2.1% in 2022. For China, the real estate market indicators are in a negative territory despite of government efforts to boost the real estate market. A major turnaround is not expected since buyers' confidence remains weak due to strict COVID measures and developer bankruptcies. On the auto production, the EV jumped by 120%, so 3.28 million units, which accounts for 22.5% of the total vehicle production in the first 7 months of the 2022, which is good news. The strict COVID containment policy in China will contribute for the continuation of supply chain bottlenecks despite a slowing demand. Steel demand in China contract by 6.6% in the first 8 months of 2022. For the whole year, steel demand is likely to fall by 4% with the low base effect on the second half of 2022. For Europe, Europe is facing a dire economic conditions with high inflations and the energy crisis. Sentiment is deteriorating and industrial activities are cooling sharply toward decline as higher energy prices are forcing factory shutdowns. On the construction side, the construction activity are generally weakening amid high material costs, a shortage of materials, rising interest rate, and falling confidence. Italy, for its part, has seen strong construction growth in 2022 on the back of government incentives, but the outlook is still uncertain. The German auto industry is recovering, but at a slower pace, with the more visible improvement expected by 2023. The passenger car production plunged with weak demand and increasingly severe shortage of components. Steel demand in Europe is expected to contract by 3.5% in 2022. For Japan, the civil engineering projects associated with natural disaster prevention programs will support construction steel demand. Growth in the automotive industry with easing of supply chain constraints that allow for continuing recovery of steel demand in 2023. The non-residential construction and machinery sectors, steel demand will continue the moderate recovery in 2022. For Japan, the world steel demand forecast is expected to grow by 0.2% in 2022. India is expect the steel demand to grow by 6.1% in 2022, which is really good news, supported by robust urban consumption, supported by roads and metro projects. Strong growth in steel demand is foreseen for Malaysia and Philippines, backed by governments resuming delayed or halted infrastructure projects. For Russia, despite of heavy sanctions imposed, steel demand is expected to contract less than what was forecasted at the beginning of the year, mainly due to the high oil and government support measures on construction. The auto industry and machinery sectors have seen a deep contraction due to high dependence on imported parts and components. In 2023, steel demand is expected to see a deeper contraction as the sanctions become more biting over time. Steel demand in Russia is expected to decrease by 6% in 2022. For MENA region, Middle East, North Africa, steel demand remains resilient, supported by oil exporting countries and mega infrastructure projects in Egypt. However, high oil prices have not led to a major increase in new construction projects in the GCC countries as governments are trying to build up fiscal buffers. In Turkey, the lira depreciation and high inflation are hurting its construction activities, leading to a contraction of steel demand in 2022 and only a small rebound in 2023. For the last in Latin America, the deceleration in steel demand, the region is still facing challenges from a high inflation environment. Following an exceptional rebound in 2021, steel demand in many South and Central American countries will see a contraction in 2022, with significant destocking and slowing construction. In the commodities arena, the Brent crude price remains above $90 a barrel, supported by OPEC reduction on the output by 2 million barrels in November and the uncertainty about the China's outlook, which is curbing oil demand. Iron ore price in China remains above $90 per ton as early November, which represent a drop of 40% from the peak in March, since the market sentiment is still fears for recession and the uncertainty in China regarding COVID lockdowns. Newcastle coal price future dipped below $350 per ton mark, which is a level not seen since early May and which represents a drop of 20% from September. According to the International Energy Agency, global coal demand is growing 1% 2022 and will reach about 8 billion tons, which match with the all-time peak in 2013. LME steel scrap in Turkey. Turkish mills are struggling with weak steel demand and high energy costs, so driving to a lower demand for scrap, holding prices low. LME HRC steel prices for flat products remain just above $500 per ton, which is a 45% down from the 2022 peak, which was reached in March. So still sentiment on recession concern and fears of COVID lockdowns. LME nickel prices are trading around $23,000 per ton mark. The global primary nickel production could increase in 2022 by 19%, which will reach 3.21 million tons. And the nickel deficit for 2021 should turn into a mild surplus of about 40,000 tons in 2022, according to one producer in the market, which is Russia's Nornickel. Aluminum prices are trading around $2,300 per ton, which is again down from the 50% peak in March. Alcoa, the largest US producer, has recently warned investors that high energy and raw material costs and a fall in aluminum prices are putting pressures on margin. Century Aluminum, the second largest domestic producer, announced in June that will close one of its plants in the US and lay off over 600 workers due to rising energy costs. LME copper prices remain around $7,500 per ton. Freeport-McMoRan is vocal about shortage risks, stating that current low prices do not reflect the tightness in the physical market. Ferrosilicon manganese price rebounded slightly in October, according to Steel Mint, due to growing demand for ferroalloys in the domestic market. The World Ship Index, reported by Freightos, reported stabilization on the freight rates. Ocean spot rates ex-Asia were stable last week, but the pace of October price slides slowed compared to September. Some good news from the World Steel website. So they reported that the world crude steel production increased year over year in September by 3.7%. In September, Asia grew 10.6% year over year and was the main driver for the world steel production uptick in September. Chinese steel production was the main driver behind the Asia. The production in China grew by 17.6% year over year. India was another bright spot in Asia and one of the fewest countries in the world report an increase on year-to-date steel production. Of an improvement on steel production in Asia, European markets still facing challenges, mainly driven by energy prices and availability. Kalyanish has updated the numbers, and since September 8th, the number of shutdowns in Europe has increased. More 3 blast furnaces were temporarily idle, Dunafer and SSAB. On graphite electrodes and needle coke, in China, the inventories are low and steel mills will need to replenish their inventories, which is driving the expectation of higher price for the new orders. In October, graphite electrodes and needle coke prices softened, but reached their lowest variation month over month, indicate a possible rebound on prices for the next months. Steel production increased in China and India, number 1 and 2 on steel production, and are backing up the recovery in graphite electrodes demand. According to the Graphite Q3 report, on November 4th, Graphite announced that the operations at their facility in Monterrey remain suspended, and it's still unclear when the operation will resume production. Monterrey plant accounts for 30%, about 60,000 tons of Graphite total annual production capacity, and currently the only site that produced the pin stock utilized for all Graphite electrodes. Graphite is working to restart St. Mary's facility, Pennsylvania state, as well as pursuing other mitigation strategies to produce 100% of their pin needs when fully implemented. If Monterrey does not reopen, Graphite will be significantly impacted for the first 2 quarters of 2023, with a reduction in sales of 50% or more before recovery in the back half of the year. According to the same report, in Q3 of 22, approximately 4,000 tons of graphite electrodes were delayed due to the facility suspension that began in September. The impact on fourth quarter sales volumes expect to be in the range of 10 to 12,000 tons. And more recently, in November 18, Graphite filed a document stating that the Monterrey plant was back in operation. So our episode comes to an end, and I would like to reinforce Altec's unique proximity to our customers in the 5 continents, 4 warehouses, one in China, Belgium, Turkey, and South Africa, and 2 more coming, one for Latin America in 2023 and another for North America in 2024. On top of that, we have PIN inventory enough to cover 1 year of sales. And last not least, the 5 ISO certification, and coming from the 6th certification, the ISO 50001 energy management systems. I would like to thank you for your attention, and please, if you have any comments, questions, suggestions, contact our local representative or send us an email, altech@altechgroup.net. Thank you.